Hello and good morning. You tune into Market Cafe. I'm Ankita Saxena, and in the next half an hour, I'll take you through all of that transpired on the global front and what are the moves that you can track and watch out for before the start of D Street. Let's take stock of how the Wall Street shaped up yesterday. Now, remember, we did have the Trump speech also today early in the morning where he was addressing about, of course, the voting and how he feels that the voting was fudged earlier on and how it's going to shape up before the interim elections in the month of November for the US. But let's talk about Wall Street and how that shaped up. Well, we did see major stocks slipping in trade. In fact, we did see the tech stocks and semiconductor stocks also see a sharp sell-off, and on account of that, Nasdaq was down 387 points, 1.4% of a cut coming in. S&P 500 was also down 0.5%, and Dow Jones also trading down 105 points. In fact, we did see crude also that still continues to hover around the $85 per barrel mark. We did see crude jump up a percent. We had WTI also that is trading with gains of 1%. 79.86 is where the crude is also, the WTI is also sitting at. But let's talk about the Asian handover and how Asian handover looks like right now. Well, Asian handover was also a sea of red coming in. Hang Seng down 0.5%. Shanghai also trading with cuts of 1% there. Nikkei is down almost 4%. There are major knock coming in as far as the Japanese markets are concerned. And S&P ASX 200 is also down 0.8% right now. So losing, a streak is what we see coming across board. And we also have Netflix, a stock that has fallen on earnings forecast disappointment, and the company says it will have fewer engagement updates going ahead, and on account of that, we did see the stock slip in the trading session as well. Let's talk about how the Indian market is likely to start. Implied start to Nifty is also indicating towards a very, very flat start with gains of just 8 odd points. So a very muted start is what we're expecting this Friday morning. But let's talk about US President Donald Trump who has renewed his claims for foreign interference in 2020 presidential elections, saying its administration has declassified documents that allegedly expose vulnerabilities in the US election security. Trump accused China of gaining access to American voter data and described it as the largest compromise of election information. He also defended his administration's a record on the economy and military, although no independent evidence has yet been presented publicly to substantiate the latest election-related claims. And US President Trump has accused China of attempting to influence the US presidential election. And speaking at the White House, Trump claimed that China engaged in election-related activities aimed at undermining his first administration during the 2020 campaign. Listen in.
U.S. spy agencies began learning about the compromise of voter registration files in 2020 when they discovered that tens of millions of voter data, think of that, tens of millions of voters' data in 18 states have been bought, stolen, or hacked by China. Yet those responsible for sounding the alarm instead kept the information secret and hidden. They did not disclose to me as president or to anyone else, and to the best of our knowledge, they did not inform Congress. In fact, all they kept saying is, this is the most secure election in the history of our country, a standard, very pat line that was divvied out to say. The cover-up of this colossal security breach is even more disturbing in light of the additional information showing that China engaged in other election-related activities to undermine my first administration and our 2020 campaign. They did not want, and they just didn't want it. They fought like hell not to have it, Donald Trump, to win, and for good reason.
And tensions in West Asia continue to escalate. Iran has warned the U.S. that any strike on its power infrastructure or bridges would cross a red line and trigger retaliation across the region. Tehran has also reportedly asked Yemen's Houthi rebels to be ready to disrupt shipping through the Red Sea if Washington expands its military campaign. The warnings come as the U.S. carries out fresh strikes on Iranian targets, raising fears of a broader threat to the global energy supplies. And moving on then, let's talk about the Trump administration that has unveiled stricter visa rules for foreign students, exchange visitors and journalists. Instead of visas lasting for the duration of a course or employment, most students and exchange visas will now be capped at 4 years, while journalist visas will be limited to 240 days or 90 days for Chinese nationals. The new rules also shorten the post-study grace period from 60 days to 30 days, with officials saying that the changes are aimed at improving oversight of foreign nationals. And artificial intelligence is taking center stage in China's geopolitical strategy. President Xi Jinping is set to lay out Beijing's vision for global AI governance at the World Artificial Intelligence Conference in Shanghai, while Hawaii is expected to unveil its most powerful AI computing cluster yet. The event comes just ahead of the US-China government-level AI talks under the Trump administration, highlighting intensifying competition over both AI technology and the rules that will govern it. And Netflix shares slid more than 8% in after hours trade after the streaming giant issued a weaker than expected outlook for the third quarter. While Netflix says its financial performance remains solid, investors remain focused on how the company will sustain growth as competition intensifies and subscriber expansion also starts to mature. And TSMC has posted another blockbuster quarter, with second quarter profits surging 77% on a year-on-year basis, comfortably beating street estimates on the back of a booming AI demand. The world's largest contract chip maker has also raised the stakes in the US, announcing an additional $100 billion investment in Arizona, taking its total commitment there to $265 billion. Shares of 7 and I Holding, the parent of 7-Eleven, jumped more than 4% after reports that the company is close to acquiring a stake in Poland's convenience store chain, Żabka Group. The deal, reportedly worth several hundred billion yen, would strengthen 7 & I's presence in Eastern Europe as it pursues its goal of expanding the global store network. And SpaceX has called off the latest test flight of its Starship mega rocket after an automatic launch abort triggered when some engines failed to ignite. CEO Elon Musk and 2 Raptor engines will be replaced, with another launch attempt likely early this next week. The setback weighed on investor sentiment, sending SpaceX shares down more than 3% in extended trading. And the UK-India Free Trade Agreement has officially come into force, of opening duty-free access for 99% of Indian exports to the British market. Karnataka says the pact will give a major boost to sectors including biotech, pharmaceuticals, textiles, engineering goods, aerospace and premium coffee, while also creating fresh opportunities for MSMEs and agriculture exporters. The state expects Bengaluru's IT sector to benefit through service exports, with more British companies likely to set up global capability centers in Bangalore and Mysore. Import duties on several products, including aerospace equipment, automotive goods, electrical machinery and medical devices, will be cut to zero under the agreement, with some reductions phased in over the next few years. British Deputy Commissioner Chandru Iyer also announced that leading UK universities, including Liverpool, Lancaster and Imperial College London, plan to establish campuses in Karnataka alongside 2 British schools. Celebration concluded the flagging of the first export consignment of Jindal aluminium and electric products to the UK from Bengaluru's Whitefield Inland Container Depot. And Karnataka has stepped up its investment outreach, with Industry Minister M.B. Patil holding a roadshow in Kolkata to attract fresh manufacturing projects to the state. Patil, accompanied by a senior government delegation, met representatives of 8 leading companies, including Greenply Industries, Tega Industries, Regal Resources, Graphite India, Vikram Solar and Rupa & Company. The minister pitched Karnataka's Beyond Bengaluru initiative, urging companies to explore investment opportunities in cities such as Vijaypura, Tumakuru, Belagavi and Hubli, instead of concentrating only around Bengaluru. Amongst the key outcomes, apparel maker Rupa & Company expressed interest in setting up another manufacturing facility in Karnataka, while Regal Resources discussed expanding beyond maize processing into other agricultural products. And with that, it's time to slip into a short break. Don't go anywhere, we'll be right back. Welcome back. You're tuned into Market Cafe. Let's take you through all of that you need to watch out for in today's session ahead of the monsoon session of the Parliament, which is scheduled to begin from the 20th of July. The government has proposed introducing 5 new bills, including measures to amend the MSME Development Act and the income tax law. My colleague Prakash is now joining us with the details.
Well, the monsoon session of Parliament is likely to be stormy amid various political developments. However, the much talked about constitutional amendment bill is not part of the agenda so far. In fact, the government has listed various key bills that are crucial from a business standpoint. In fact, the Income Tax Amendment Bill 2026 to replace the ordinance is part of the agenda. The bill seeks to deepen India's sovereign debt market. You are aware of the fact that the government has already exempted long-term capital gains tax and withholding tax on interest income for FPIs and FIIs investing in government securities. In addition to that, the Foreign Contribution Regulation Amendment Bill 2026 is also part of the agenda. The bill was introduced in the Lok Sabha in March last year. Now it has been listed for consideration. The MSME Development Amendment Bill 2026 is also part of the agenda. The bill focuses on improving the ease of doing business. Viksit Bharat Diksha Adhisthan Bill 2025 is also part of the business list. Along with that, the Supreme Court Number of Judges Amendment Bill 2026 has been listed for this session. In fact, the bill proposes to increase the sanction strength of Supreme Court judges from 33 to 37. So these are key inclusions so far. In fact, the business list along with some other items for the monsoon session will be discussed at the CCPA meeting today.
All right, let's move on then, and let's go across to my colleague Meryl, who's standing by with all the stocks that will be in focus in today's trading session. Over to you, Meryl.
Yes, we're seeing a mixed bag of earnings leading the results that have come out over the last night, with Piramal Finance leading the positive surprises. The company's reported quite a strong quarter, with profit jumping 67% on a year-on-year basis, comfortably ahead of expectations. Net interest income for the company came up 50%, while retail disbursements surged 44%. Assets under management as a figure also crossed 1 lakh crore for the company. And importantly, asset quality remains stable, making this quite a strong all-round quarter for Piramal Finance. Borosil Renewables also delivered quite an impressive set of numbers. Revenue grew 17%, but the real highlight for the company was margins. EBITDA was seen more than doubling on a year-on-year basis, with margins expanding sharply to over 31%. This also reflected improved operational efficiency for the company, and this was quite a strong result overall for Borosil Renewables. Moving on to WeWork India, the company continued its path towards profitability. Losses narrowed sharply to just 4 crores from 14 crores last year, while revenue grew nearly 28%. Heritage Foods reported numbers that were largely in line in terms of revenues, with revenue rising 18%, but profitability for the company remained under pressure. Net profit fell 39%, while EBITDA margins slipped from 6% earlier to now 4%, indicating the continued cost pressures that the company has been facing. And finally, Ajmera Realty posted a healthy set of numbers. Sales bookings rose 35% on a year-on-year basis, while collections came in at 173 crores, pointing towards steady demand for Ajmera Realty in the residential space. So yes, these were some of the stocks that we're expecting to see in focus on the back of their first quarter performance.
All right, so those are the earnings candidates, but let's move on to other stocks that will be in focus today. And for that, my colleague Ashesha is now joining us.
Yes, first up, let's talk about Hexaware Technologies. The stock is in focus because the company has informed the exchanges that they've partnered with Factory to offer AI agent-native software development solution for enterprise clients. So positive development that has come in for Hexaware Technologies. HCL Tech, meanwhile, has signed a 7-year agreement with Guardian Life to accelerate AI-powered technology and operations modernization. So several developments that have come in with respect to AI developments, especially for the IT sector. Keep an eye out on both these counters that will be in focus today. Jindal Worldwide, meanwhile, has said that they are expecting exports to grow by about 15 to 20% in FY27 after the India-UK agreement that was signed over the last couple of years. It aims to more than double exports over the next 3 years, supported by improved market access and tariff benefits. So clearly, exports for Jindal Worldwide are expected to grow manifold over the next few years, and that is a big positive. Jindal Worldwide in focus, and we could see some positive development over here on the back of this news piece. Meanwhile, Servotech renewable power systems will also be in focus, and this is on the back of an order win. The company said that they won an order from Rural Urban Development Department of Uttar Pradesh, and this is for 900 kW rooftop solar project across 12 locations. So new order win is why this counter will also be in focus today. Shifting focus to Neel Kamal then, and Abacus investment managers have bought about 2.8 lakh shares at 13.35, so keep an eye out on this counter. And two stocks where the lock-in period ends today. One is SmartWorks Co-working, about 38% equity is locked in, and that will open today. And Bharat Coking Coal, 70% equity lock-in will open today. Perhaps we could see some bit of negative selling and negative pressure on this counter, so keep an eye out on both these stocks. One is SmartWorks Co-working, another is Bharat Coking Coal.
All right, Ashisha, thank you so much for joining us with that. But let's move on and shift focus to Wipro, that reported its first quarter numbers. That was largely a mixed one. As far as revenue is concerned, that came in line with the estimates, but both operating profit and margins were a miss on the street expectations. Management remains optimistic on the AI-led demand, even as the margin improvement stays a key focus. Mansi is joining us with the highlights and the brokerage verdict.
IT major Wipro Limited reported its Q1 results on Thursday, and here's a quick look at the numbers. In terms of the consolidated net profit, the number came into 3,352 crore for the April to June quarter, which was up around 0.6% from 3,330 crore a year earlier. Profit came in below the consensus estimate of around 3,442 crore. Talking about the revenue, the consensus revenue rose around 10.6% year-on-year basis to 24,479 crore, but came in below the estimate of 24,776 crore. However, in terms of the revenue as well as the profit, the numbers came in in line to our estimates. The company's board also declared an interim dividend of 2 rupees per equity share. Taking a deep dive into the intricacies, the IT services company's gross revenue increased 1% sequentially, while IT services revenue stood at $2.61 billion, which was down around 1.4% quarter-on-quarter, but up 1% year-on-year basis. In constant currency terms, Wipro's IT services revenue declined 1.2% sequentially and increased 0.9% from a year ago. Total bookings for the quarter stood at $3.37 billion, which was down around 2.7% sequentially in constant currency, while large deal bookings rose 12.9% quarter-on-quarter to $1.6 billion. IT services operating margin came in at 16%, down 130 basis points sequentially at 120 basis points on a year-on-year basis. Operating cash flow was 3,288 crore, equivalent to 98% of net income, while the voluntary attrition stood at 13.9% on a trailing 12-month basis. All in all, the revenue and the profit figure were in line with our estimates. However, the EBIT and the margin figures were a miss.
All right, so that's Wipro, and watch out for that stock in today's trading session and how that reacts to the earnings. Let's talk about Tech Mahindra also, that reported a steady set of numbers. For the first quarter, revenue, EBIT and EBIT margin managed to meet the street expectations. However, PAT came in lower than what the street was penciling in, despite seeing over 8% jump on a sequential basis. Darshita is now joining us with a roundup of Tech Mahindra earning and key takeaways from the management con call.
Right, Tech Mahindra reported an overall mixed quarter for the first quarter FY27, and if we look the revenue, EBIT and the margins, EBIT margins were largely in line to what the street was estimating. But the profit was something which missed the street expectations. Now, so start off first with the numbers. The revenue grew over 4% sequentially, coming in at 15,700 odd crores, and the EBIT rose nearly 9%, taking the operating margins up by 59 basis points, coming in at 14.4%. The net profit also increased on the QOQ basis but came below the analyst estimate. Now, operationally, the quarter was also encouraging. Constant currency revenue growth accelerated, coming in at 2.6% for this quarter versus 0.6% for the last quarter. And the deal wins also stood at $1.08 billion, marking yet another billion-dollar plus quarter and highlighting the healthy client demand. Attrition also improved to 11.8%, reflecting better workforce stability. Now, the growth was driven by manufacturing, BFSI, healthcare and the retail, while the communication and the technology and media and entertainment segment remained relatively weak. Now, on the management commentary, company said that FY27 marks a shift from a margin recovery story to a sustainable growth story with confidence of outperforming peers on the revenue growth. The company continues to strengthen its AI capabilities with over 350 AI agent builds and 65% of employees now AI certified. Management also highlighted strong demand across AI, cloud, cybersecurity, and the digital transformation services while reaffirming confidence in achieving around 15% operating margin in FY27, supported by healthy order book and a robust large deal pipeline.
Let's also go across and listen to what management had to say on their segment growth in Q1. Let's listen in.
The banking and financial services sector for us grew 8.1% year on year. We continue to see healthy demands in areas like payments, modernization, wealth platforms, regulatory compliance, identity and access management, and AI-led transformation. During the quarter, we also announced the acquisition of Avant Techno Solutions, a Canadian-based firm specializing in payments, modernization, and wealth platforms. The acquisition is aligned with our stated strategy of deepening our presence in payments and the wealth segment, which we have consistently identified as important growth areas. It also strengthens our position in a structurally high-growth segment of financial services. The manufacturing sector for us grew 17.2% year on year. Our focus remains on scaling sustainable growth across aerospace, industrial, and process manufacturing. We continue to see strong client interest in intelligent, data-driven operations that bring together AI, data platforms, engineering, and enterprise systems at scale.
And well, with that, it's a wrap on this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.